All right, hey there. Good morning, everybody. Christopher Franks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on Friday, the 2nd of October, 2020. Man, I'll tell you what, everybody kind of joking around about this year and about October is going to have two full moons and all this other stuff and, set back your time and all that here in the U.S. where we have that daylight savings time in most states and, man, so it kicks off with old President Trump there getting the coronavirus, huh? Yeah, I said the Rona. It doesn't surprise me. Come on, guys. It shouldn't surprise you either. Now what happens? Well, again, I pretty much expect everything to continue happening as I've been talking about it for the last couple of years now, guys. Getting everybody warned and ready for, what I believe we're at. And it's not just me. I've got a couple of real heavy hitters that, kind of seeing the same thing, guys. EWI, Elliott Wave Institute, or Elliott Wave International, I'm sorry. They pretty much feel the same way. I'm not just this lone guy out here kind of saying this thing. So, I expect volatility through the end of the year, with the presidential election and, just this whole idea of neither Biden nor Trump saying, oh yeah, there's going to be a peaceful transition of power. Sure, not a problem. Both of them kind of staying away from that. I don't know, it creates uncertainty, guys. And, the market itself is just a reflection of that uncertainty. Most people tend to think that, that news happens and then that makes the market do things, but really it's the other way around. News is the reaction to what's going on with everything else. And we tend to pick out those points when news is happening where our biases can be met and something happens in the market. But, things are always happening. News is always happening, guys. Market's always moving. News is always happening. We just pick out those couple of times here or there where we want to say something. But if you go back and you look, historically, there's no real correlation there. Lots of events that should have moved markets don't, and lots of them that supposedly do move markets shouldn't have. It just is what it is, guys. So hopefully I'm getting that through to you and you're learning. But anyway, hey, welcome everybody. It's good to be here. Hopefully you guys are having a great day. We're going to take a look at multiple markets today. We're going to look at, Bitcoin and gold and silver and oil and natural gas and stock market. Maybe take a few requests, kind of look at some things, talk about some things, get you guys in the know, in the ready, beyond what what other people try to get you to think. Stop thinking like the herd. You're going to keep getting what they're getting, and you don't want what they're getting, or at least what they're about to get. So anyway, if you haven't joined us yet, guys, see us at howtotradetowin.com. We'd absolutely love to have you with us. We do what the other guys say they're going to do. We provide education. We provide profitable setups all day, every day, guys. All these things happen. And you know what? Even more than all that, we've got an incredible, amazing group of individuals in our trading community there. And you see a lot of them talking during the stream. And, it's just, they're great people, man. They're great people. So we'd absolutely love to have you join in and be a part of all that. So do it at howtotradetowin.com. All right. By the way, guys, follow us on all our social media up here. Because if we throw out discounts or, contests or whatever, it might be one, it might be all of them. And so if you're not on them, you won't know. So make sure you know, all right? Love to have you there, guys. Who's here already? Let me see here. We've got Sean. What's going on, Sean? Chris Day is here. What's up, buddy? Man, Chris Day been around forever and a day with us. Hey there, LXT. Good to see you. Brian's here. Let's see. Who else is here? Data's here. French Bull, what's going on, man? Pixafin checking in from Switzerland. Still love saying that. Just rolls off the tongue so easily. Excuse me. Let me see here. Oh, gosh. Give me just a minute here. I've got somebody here I think I need to get rid of. If I can. There we go. There we go. Sorry. I don't like people coming in and spamming the channel with their little marketing messages. It's so annoying. It's just dumb. Hey there, Crypto Mowgli. Good to see you. Onyx King, what's up, man? He says, we started perfectly. Sets the stage for a great October. I like the way you think. Let me see here. Ciro, what's going on, man? Do I think it's a good time to play the volatility? I was thinking about jumping into UVXY. I think we're probably getting there. Yeah. Again, we're kind of looking at this current area. We'll talk about it here at the stock market, but I think we're kind of at that point where we're looking for some reversal to the downside really kind of kicking in. So your volatility should really kick up with that. So I think it might be. If not right this second, pretty soon here. Exciting day, Alex T. Yes, it is. Devlusion, what's going on, man? Sparta Crypto is here. Toro, what's going on, man? Good to see you. Alonzo, hello. Hola. Dexter, what's going on? And Oscar, what's going up, man? All right, so here we go, guys. By the way, real quick here, I guess before we do this, we'll talk about this real quick. Notice the screen, right? Now, TradingView has that ability that you have on a lot of other trading platforms where you can have a gradient in the background. So instead of just one solid color. So all you do is you right-click on the background here. You go to Settings. You come up here 1, 2, 3, 4 down to Appearance. See the background here? If you haven't done it yet, it'll say Solid. Just put it on Gradient. That's your upper color. This is your lower color. So you can see it on black there. See how that changes? It's not so great, is it? That's kind of interesting. But anyway, just a little something here to show you guys some things that are going on, what they've got there. I like this. It's enabling me to get all my charts one color now. Well, one gradient of color versus, where I had some dark and some light because I work so late at night and early in the morning. So you can't have the same charts, man. If you're staying at charts all day, doing work, by the time the evening comes around, the bright charts would just kill you. And I love white charts, man, but can't do it late at night. Anastasia, good morning. Good to see you jumping in. Hey there, Biomage. Good to see you as well. And Carl here. Jump from Scott's to Chris's stream seamlessly. I love that. So anyway, just that was a quick heads up there on what you can do with that now. I love it. Really excited that TradingView did that. So what happened? So last night, right about this area here, I did our BMA video update. And I told I zoomed into the 5-minute and I showed them that we've got basically, an ABC up here. And I said we were most likely going to get rejected right where we were. And of course, our target was down here. It was right here at this S1 pivot is where I was looking for wave 3. Same target I had from earlier in the day as well, by the way, guys, from the morning. Same target. And sure enough, we did. We came down, we bounced up and came down, finished out. So basically, we had a 1, 2, 3, 4, 5 here to finish 5. My wave 4 target was already set up here. And we kind of hit that area right there this morning. So, we did well. We got the move up yesterday, then we got the move down to my target, and then the move up to my target. And now we're looking for a move down to my target. Now, the initial, if you do it the way, you always do, what you're going to do here, again, is you're going to measure out wave 3 right here. And you pull it up there to where wave 4 ends, and you say, okay, well, the 61.8 is over here, right? Let me see here. I'm sorry, let me pull that up a little bit higher. There we go. The right wave 2 there. There we go. And so the 61.8 comes right here about 263. And that's usually where we look at, the 61.8 extension of wave 3. However, I'm looking at this going, well, you know what? I think we might see, I wouldn't be surprised if we saw actually a move at least to the 10.175, 10.180 kind of area here, this S2 pivot. And maybe even the EQ of this demand structure here at about 10.120. Now, why this 10.120? Well, because this goes all the way back here to the 9th of September. And getting down toward this area right here means that this first subwave of the larger wave 3, you get this large wave 1, large wave 2, and this is subwave 1 of that large wave 3. And so as I continue to tell you guys, usually your first subwave will terminate near the termination point of the previous wave of the larger degree. So again, this is Roman numeral circle 2. So this coming down should be Roman numeral circle 3. And so this subwave here, this parentheses, Roman numeral, I can't even say it. Parentheses, Roman numeral here, 5 should terminate right around this previous endpoint here. So again, initially the target's going to be that 10 to 60 kind of area, but really wouldn't be surprised to see it kind of pushing on down here a bit more down to maybe 10-175, or maybe even to the EQ here at 10-120. So that's what we're looking for. But in either way, when it does that, when you get that reversal off that, you should be looking for price to target up here to the EQ of this supply structure here, which happens to be right here at the high volume node as well, at about 10-725, 10-735 right there. And so that's what I expect. And so, again, that would be a 1, a 2, and then you have your larger 3 coming down. Simple as that. Nothing really else going on there. Right now, the 15-minute, we've got this hidden bearish divergence on RSI. Stochastic RSI has topped out over and overbought and dropping down out of it now. But if we zoom out to the 1 hour, by the way, this was from, in case you don't, you're like, oh yeah, whatever, you didn't say that last night. This was the path I drew on the video last night. So there you go. I do have video proof. Yeah, so, again, just kind of following exactly what we're looking for, more or less. 1 hour Stochastic RSI here is up and overbought, nearing topped out there. Again, we got a bit of hidden bearish divergence right here on the 1 hour as well. We're getting higher highs here on the oscillator, but only lower, or not quite higher highs yet on the price. So, that hidden bearish divergence suggesting that we're going to have a continued move to the downside. Which, again, makes sense. Wave 4 coming down. If we jump up here to the 4 hour, even though the 4 hour bounced down here and oversold, the Stochastic RSI did, RSI itself did not hit oversold yet, so it makes more sense to drop on down here, get this, and go up. By the way, you'll notice right here that this target, this wave 5 target right here for this, is right below the S1 pivot on the 4 hour. So don't assume, because I said, yeah, I wouldn't be surprised to see it go lower. Don't assume it's not going to reverse from here. Again, it is the projected 61.8. It's where we usually look for it, and it has confluence with the S1 pivot here on the 4 hour, and the hourly here, as you can see there. So, definitely the first place to look right here. If it continues further, then we'll look down there at, down here at, what is this? Right around 10-175 again, and then 10-120 kind of area. But that's only if you don't get the reversal off of this area right here, guys, okay? I'm just trying to make that clear, because I don't want you going, oh, well, I thought it was going to go way down here because you said there was a possibility. Well, those only become active if we go down beyond where we normally expect it to go. That's it. Right now, we're getting this move up. I think we've got maybe a 1, and we're working on a 2 here. And then we'll have a 3, 4, 5, which will end pretty close down here to the bottom. So then you'll have a sub 1, push up, and then come down like that if it's going to do that. The count becomes invalidated if we move above this wave 4 swing high here. But all that does really is it invalidates this stuff that the wave 4 is done yet. It could be that wave 4 is still playing, still printing. If we look here, again, let me go ahead and map out wave 3 here. So this is, parentheses, wave Roman numeral 3 here. All right. And you can see we're right here. We hit the 38.2 retracement. That's where we normally look for wave 4 to go. However, wave 4 can go to the 50%. I mean, it can even go higher. Wave 4 just can't move into wave 1's territory, except like in a leading or an ending diagonal. But most of the time, almost exclusively, you'll see wave 4 bouncing or rejecting at the 38.2. If it does go beyond that, then you look at the 50. You start getting iffy when it really moves, continues impulsively through the 50. So again, if it goes above this, all that means is the wave 4 is probably still playing out toward this pivot, which right under is the 50% retracement, and then turn down and head down. I wouldn't say, oh, all of a sudden this is the bottom here, we're going way up just because of that, going above this swing high right here. Because again, 50% is definitely a very possible and very viable wave 4 target. So that's it. But for right now, I think we've just got basically a 1 here, and we're getting a 2 on a pullback. And then we'll look at 3, 4, 5. Get a sub 1 of this 5 wave here, of this 5th wave. So really, I mean, that's kind of where we're at, guys. Nothing real difficult about it. things become interesting if we get above this swing high, right? This wave 2 swing high at 10,920. If we're getting above that, even though we're still below this here, the odds are this is not a 1-2 here. The odds are this other account is something different, and we'll have to look at that. And so if it does get above that, again, we'll look at 11,080 there, and then this 11,300 kind of area is the targets. But, right now it doesn't make sense that it does that. So, until we get through all these other areas, there's no reason to be overly concerned about that at the moment. Let me see here. Let me catch up with you guys here. Who else is showing up already now? Let's see. Sparta says, I guess you missed the 80s in Miami Vice with your gradient colors. We should also switch to pixel art. It'll give us some style. No, man. It's avocados, man. Who doesn't love avocados? Guacamole, man. That's where it's all about. Well, no, not that isn't really the reason for the colors. It just does look kind of like guacamole or avocado. I'm sorry. Here, if you take everything off there, looks kind of avocado-ish. But again, TWC, we're green. So green's the color of money. I'm all about it. The yellow takes a little sting out of the flatness of the green color, so it works for me. Hey there, Hank. Good to see you. LXT says it's all about that ambient light. It is, except that, man, I've got it on my screen here, and it drives me nuts when it kicks in because my screen looks really weird. Everything's off color then, and that just drives me absolutely nuts. So, yeah. Can't say I don't try. Let me see here. Oh, you can't see the levels on right here? There we go. How about that? Or I could probably even put it up over here. There you go. Now you can see it over there. Don't worry, guys. I've got a fresh layout that's going to happen on Monday. I was hoping to have it by today, but everything else just fell behind with everything, so it'll be Monday. But everything will be really clear and easy to see and whatnot with all that. So, but yeah, so there we go. Let me see here. Black screen in the chart. I don't know what black screen you're talking about there, Gerben. I think you're the only one having that, man. Sorry, if I could, I would. Let me see here. Hey there, Kyle. Good to see you. Mad's checking in as well. Let me see here. Do I ever watch junk bonds on HYG? If it's any good to spot coming trends? Oh, do I ever watch junk bonds HYG? No, I don't ever watch them. I don't. I guess I've never had a reason to watch them. I see what you're saying, but I've never used it that way. I've got things that I do, so I guess it's more just a product of just already doing what I do, so it doesn't require that. Let me see here. You have a black chat box on the screen too. Let me do this. Let me turn this this chat box off up here. I don't know if that's where you guys are looking. Maybe it's just a YouTube thing. Let me turn this off. And we'll just do it this way. And you guys can just pay attention to what I'm saying. And if you don't see the chat come up, it's because it's on the other platform since I'm streaming to YouTube and Twitch. But anyway, yeah, so I don't know if that helps with any black box you guys might be having or something. Anyway, let me see here. Let me see. Bitcoin Daily. See the Head and Shoulders breakdown from the top and now possibly building a descending triangle for another breakdown. Mr. Who is saying this, so let me check out what he's talking about here. Let's go ahead and zoom this out here. Head and Shoulders. Where are you seeing a Head and Shoulders? I don't don't see a head and shoulders. If you're talking about this as a head and shoulders, I would never, no. There's no symmetry at all between this shoulder and this shoulder here. Patterns usually have a bit of symmetry, guys. And so, we can tolerate when they're not, we don't expect things to be exactly the same. But when they're this far off, it's usually a clue that it's not what you think it is. So if you're talking about this as a left shoulder and a head on a small little teeny bitty little tiny little right shoulder, maybe you're looking at this here, maybe. Maybe, but I don't know. For me, again, this is this large move here really kills the symmetry between this shoulder and this shoulder here. It's the same idea as this, just instead of wider and shorter, it's just taller and really small here. So you get this very large shoulder and a very small shoulder. And so what I've found is usually if your patterns are lacking symmetry like that, they usually don't perform like you expect them to. But nonetheless, it did come down, and that's the important thing, right? As far as a descending triangle goes, maybe, I don't know, I'm guessing that you mean this right here. So you have your support here and this. I can maybe buy into that. Maybe, sure. Just importantly, I mean, pivots alone here, you're below the daily pivot. And not just below it, but really, you kind of just basically got rejected here. So getting rejected the pivot, I'm looking at least at the S1. Usually the S2. So, I mean, I figure we should at least get to the S1 here. Now, the problem with just getting to the S1 is it doesn't fill in that gap on what's it called? The CME. And it misses this block right here that I'm looking for. So, yeah, we'll see how that works out there. But yeah, I mean, possibly there. I mean, I can't, I'm not going to say this is definitely not a head and shoulders, but again, the lack of symmetry, this is so much larger than this right here. I mean, it's significant. It's visibly significantly larger than this. And that lack of symmetry really kind of makes me question that particular as a head and shoulders pattern there. So yeah. Let me see here. Let me see. Yeah, Oscar, I know we've got the transparent box there for the Restream chat box, but when you do that, the chat gets all fumbled up and everything that's around it. So if you've got anything on the background behind it, you see it all, and it looks awful. You can't keep up with it, so that's why I don't have that. Alexander, what's going on? Says, don't know if Trump got the COVID-19 or COVID-19 got Trumped. Oh, man. What's going on, Club Trader? Good to see you. Yeah, it looks like that box was what it was on YouTube. Man, I wish there was some great kind of just simple thing that we could do that makes everything so much easier. But when you use technology, unfortunately, the more of it you use, the more issues you have. I'm old enough to remember when they promised us that that personal computers and all this stuff was going to make our lives easier, give us more free time. I don't know about the rest of y'all, but I have less free time, and my life is a lot more difficult with all this electronics. Let me see here. Phoenix, what's going on, man? He says, I think you're about 90% right most of the time, and then about 10% Texan. I love it. Glad to have you with us, man, for sure. Take care of yourself and your family over there right now. What happens when price goes below the 20 MA on the weekly? Pedro wants to know. I don't know. I don't trade moving averages. They're very they're rarely used correctly, and even when they are, their results are suspect. Research, as I've continued to say before, research over the last 20 years or so has shown that moving averages are correct about 50% of the time. So basically, it's like tossing a coin in the air. I'd rather not waste my time with that. But, anytime you're averaging lower on a larger time frame, it's not a good thing. Anytime you're averaging lower on any time frame is not a good thing, but especially when you start getting up to like the weekly, that's not so great, because again, that means that over that period, whatever moving average you're using, in your case, you're talking about the 20. That means over the last 20 weeks, for the last almost 5 months, price has been generally trending lower. And so, dropping below that means it's trending lower even faster now. So I said it's been trending lower. What I meant is dropping below it means that it's trending below what that average has been over the last 20 weeks. So, yeah, I'm just not a fan of moving averages. Like I said, it's like flipping a coin. Let me see here. Let me see what's going on here. Chris Day says, watching the rising support line that started on May 10th low with interest. So you're talking about this one over here? Oh, May 10th. May 10th. I'm sorry. I was thinking March. Let's see here. Excuse me. All right. We're looking at this one right here. All right. Let's see here. Let me grab a different chart here real quick. Something that doesn't have all this stuff on it here. I think this is what? This is BitMEX? No, this is Kraken. Okay, that's fine. Let's see. I mean, this is easily, this is something we were looking at previously. If we've got a 1, 2 here, and then potentially a 3 and a 4, and then a 5 coming up. So that was what that was. We haven't looked at that in a while. Not really feeling it at the moment, because this pullback feels lower than what it is. So Chris Day is interested in this right here. That's kind of fun, isn't it? Let's see here. So 1 point is a point, 2 points is a line, 3 points is a trend. So I would say this is probably pretty close to a trend line here. So a breakdown of this should be significant. And, we're trying here. We're trying. Looks like we're probably going to get it on that drop there. So, yeah. Let me see. You got this ascending, broadening wedge kind of printing here. So, touch at the top, touch at the bottom, almost to the top there. Back down to the bottom, back to the top, down to the bottom. Overall, basically what you're seeing is that expansion of price there. And so again, why is this usually an indication that price is going to reverse? Because as you're getting up higher, your swings are getting wider. If demand is in control, you shouldn't have wide swings. If supply starts coming in and really knocking it around a bit, but there's still strength in demand, you're going to see it where price starts getting wider, and that creates that broadening. But that like if we look at just regular wedges, it's the same idea, just done separate, just done out differently. So in this case, you've got significant supply and significant demand. And they're fighting it out, and so they're getting wider. Nobody's really in control overall, because you're getting these wider and wider swings. And in this case here, they start wider, and then they get smaller and smaller and smaller. And what that's telling you is there's less and less. Demand is still in control here, but it's getting less and less, and demand and supply is starting to come in and turn it around. So I mean that's why these end up being reversal patterns. Usually, or at least corrective patterns, I guess is probably the better way to say it. Corrective patterns, which, depending on time frame, it can look like a reversal, but, it just means basically at least a correction. Wedges are corrective, not reversal patterns. Let me see here, if that makes sense. Let me see here. Let me see. So anyway, yeah. So, I mean, I think this is probably something pretty good to watch here. Again, if you're dropping through this, it just gives even more credence to the whole idea of the pivots, the daily pivots that are going on here. Again, getting rejected the pivot, falling through that support, that trend line there, you should at least be looking at the S1. I mean, that's the easy trade right there. Forget everything else. break down through that, you're probably looking at least at that right there for that. Let me see here. What's going on? Clark May says, can we expect to hit 10,625? Right now, I don't think so. Let me see where I'm at with that. I think that takes it out of the local area, right? Yeah, I don't think so. Because if I mean, it's possible. I mean, right now I'm looking at this as basically as the ABC here being done. So 1, 2, 3, 4, 5 gives you A. Then you have your B. And then this is potentially, 1, 2, 3, 4, 5. So we've got an ABC up through the 38.2. So I think, wave 4 is done. Any upside is going to be limited within this wick here as just a pullback. This is a little small one here, and we have a little pullback on a 2 here before heading lower. So I don't think, it can, but it has to get above this swing high. Until it does that, I don't think it's going to happen. I'm kind of, my bias is that this ABC has been completed. It looks like it has. And it's completed right at the 38.2, which, again, lends support to that idea that it's completed for that wave 4 there. So, now, again, if price goes above that swing high, then I would expect it to come up here around the 10,650 area, 10,660, and come off of there. So, best change that limit order. Let me see here. Onyx King says he just noticed the huge bullish divergence on the daily Bitcoin dominance runs from July to September. Alts might have to wait their turn, I guess. Yeah, and so, and remember, guys, just remember, when it comes to the Bitcoin dominance chart, believe it or not, Bitcoin dominance can increase while Bitcoin and altcoins are dropping. Because remember, all this is Bitcoin in relation, the value of Bitcoin in relation to the value of, the alt market. And so if they're both dropping, as long as, if the alt market is dropping faster than the Bitcoin market, then the gap is going to grow. And so that Bitcoin dominance is going to grow. But don't assume that just because Bitcoin dominance is going to go up, that Bitcoin has to go up and alts have to go down. They can both go down and Bitcoin dominance still rise. Because dominance is just that relationship of Bitcoin price to the altcoin markets. So, yeah. Yeah, Clarkman. Check the update, man, this morning over in Discord. The video update. Same thing as what I said earlier, yeah. I expect a minimum wave 5 target of 10,260 area. If it continues through there, then I would look right here at 10,175, 10,185, right around there. If it continues beyond that, I'd look here at 10,115, 10,120. But this area right here happens to be the H1 and H4, the 1 hour and 4 hour S1 pivot, as you can see here. So that's really kind of where I expected to get to and reverse off that. But if it does get lower, I wouldn't be surprised. I would just look at those other lower targets there. So, yeah. Yeah, Onyx King. Yeah, so alts would fall faster, and Bitcoin dominance could still rise. Yeah, exactly. Because the alts would be losing value against Bitcoin, and Bitcoin would be losing value against the dollar. Is how you'd see them both falling at the same time. And it's just that they would, fall quicker than Bitcoin. Because what happens, you have to understand, guys, the crypto market itself is very volatile. And so it's very risky to be in. And of that, altcoins are riskier to be in than Bitcoin. Because Bitcoin's much more liquid and, it's network effect, first one in, all this stuff. So people are more likely to hold that than alts. So, again, when alts are dropping off there, they usually jump into Bitcoin, if not the dollar or some stable coin. now. As I say the dollar, whatever fiat currency you guys may be in. So, yeah. Let me see here. What's going on, Levo? You like the haircut? Yeah, just get the hair on the face. It's easier to grow than the hair on the top of my head. Let me see here. Hank is quite impressed that Bitcoin did not crap the bed on the latest news. First exchange hack, now BitMEX. Seems like the little coin is growing up, or retail has left the chat. Probably the latter. Possibly. But, you know, there's implications with this whole BitMEX thing. The first thing you guys have to understand is that just because they've been charged doesn't mean they're guilty, okay? What do I mean by that? I mean, just because the CFT says, listen, they're doing this, and the Southern District of New York says, listen, they're doing this, that doesn't mean they're doing it. That just means they think they are. And so, you know, when you go to court, you file a complaint. And that complaint alleges what that what that person or that office thinks that you're doing. And they may or may not have significant evidence to prove it, guys. Or maybe BitMEX and company could be could actually be doing that, but the evidence needed to prove it is not maybe there. So I just want you guys, I'm not saying that they are or are not. I don't know if they're guilty or not. But I'm saying don't assume that just because charges are filed that they're guilty. It's up to this, when it goes to court, the CFTC, and then of course, the Southern District there, when they get to court with their thing, they actually have to prove it, guys. They have to prove that their complaint is legitimate, that what they're saying is true. And so if they can't prove it, and if they can't prove it, it doesn't mean that BitMEX and company is not doing these things, but it means that they weren't able to prove that they are. All right. So I think I do this every once in a while when there's these things coming up, because people just in general have no real understanding of the law, and they tend to think, oh, somebody got charged. Oh, they're guilty. We don't know that, guys. We don't know that yet. And if you trade based on that, you might end up putting yourself in a bad position. Depending. So just be careful how you're looking at that. Let me see here. Yeah, retail is definitely chasing DeFi. It's quick, easy money. I've told you guys this, year after year being on here. Retail generally comes in. They're looking for how can they get rich overnight. That's what you're looking for. And you usually can't. And the sad thing is, most of them that do happen to look up on it, say DeFi, and maybe they got lucky and made some money on that, they're going to end up losing it all. In the market, they will. Because if that's what they're doing and they're not really learning how to trade, they're going to get their rear ends handed to them when they have to really trade. That's the thing. And so you got to be careful. If you're doing that, you've got to be careful. You got to understand where you're at and what's going on with that. Let me see here. Can we look at silver later? We sure will. Crypto Macan there, or Mackin, Crypto Mackin. Yeah, we're gonna look at silver here in a minute. Sure. So, basically this is kind of where we're at, guys. If we look at the DXY here, what's going on? There's still no real impulsiveness up yet. So, it's still possible that this could be a wave 4 with the wave 5 still to come. A little bit lower lows. However, right now, structurally, it's still bullish. There's no reason to think it's definitely going down from here. So now we have to see what happens in this area finally, If I'm looking at this, I think so far we've got basically a 1-2, 1-2. You can see that, let me see here. Let's see, 1-2, 1-2, yeah. And even with this, I think we may have a 1, 2, 3, 4, 5, A, B, C. So there's your A, there's your B. And then as I've got here, a 1, 2, 3, 4, 5 maybe. And then so now kind of moving our way up. It's got to get above the pivot. But once you get out of this descending channel resistance, I think that's a pretty good indication we're probably bottomed out. The pattern target based on the height of this channel, once we break out through that, is 4.46 above the point of breakout. So that's probably looking to get it way up here around, 99 or so, up in that area. Right now, wave-wise, if this is a 1-2, 1-2 here, this third wave is up here around 96.75. So if I grab this here and just kind of measure this out, that gives us that 1618. I've just pulled it quick here, but right there around that 96.75 level. So that's what I'm going to look for if it does it. Things start getting interesting, if we're dropping below this swing low over here. What is this here? 92.77? 92.77? If we're dropping below that, that really starts looking to question then, is this not just a 4, until a 5 come a little bit lower, or is it really done here? Is wave 2 really done here? But until it gets to that point, we're still looking for upside. There's no reason not to. Now, the one thing I've been complaining about, as you know, and I've been concerned about, is the fact that since we came off the bottom here, by the way, that's that big channel I was talking about, that resistance. Since we came off the bottom here, is the fact that this Stochh RSI has been high, right? Well, as you can see here, we're now almost getting down into oversold. So I'm feeling pretty good all of a sudden at the moment here. As far as pivots go on the daily here, moving in sideways between the pivot and the R1, looks like we're getting a bounce right above the pivot. So if we get some continuation up through here, I mean, I'm looking for R1 at least. And, that really kind of sets you up there through it. So, right now, it's still looking all right. It's still looking pretty decent for now. Hank, hasn't it gone above your invalidation level? Didn't you give me that level that you said once it goes above there, you're going to give up on the whole downside talk? And I see you over here talking about downside some more. You saying there's reasons to look to the downside too? Yeah, you did. You gave me that right here on live stream. You gave me that level. It was 94 something, wasn't it? 94.50 or something like that. 94.51. I don't know. I don't think the reasons are that great to look to the downside right now. And if it is to the downside, it's just a slightly lower low here for a 5. Nothing any dramatic kind of move down. Most everything pretty much says up. Because again, flight to safety. The dollar is the safety. The euro is not the safety. Not at this time anyway. So as long as there's uncertainty going on, people are going to go to the dollar. Let me see here. Where I have the 3 on the left. This low all the way up here? Nah. I remember it being 94 something, man. Trying to mess with me now. That's all right, though. We'll be up there soon enough, maybe. Actually, I think it was this right here is what you were. Wasn't it this what you were looking for? The swing low right here, and that's where we went above right here. But anyway, no, seriously though, yeah, it can possibly still go down, guys. What we're really looking for here is we're looking for some impulsive movement to the upside. We don't really have that yet. You got some move, okay. And we're looking for if we can get an impulsive move up here, you shouldn't be thinking at all about lower downside at that point. Again, for me personally, this is this channel here that's going on here. Basically, don't even worry about the channel. It's this resistance here. It's been hit 1, 2, 3 times. That's a trend line. So busting through that trend line should be a pretty good indication that we're heading up. And I say, channel here, but, again, it's really this. Descending broadening wedge. That is what it is there within that channel. So, kind of just looking at that. And so, again, based on the height there, that gives you that 4.46 above the point of breakout when it happens there. I think the monthly looks really interesting. I'm looking at potentially something along these lines here. And so, I know some people have talked about a channel here. I think Hank's done that. I think you have, Hank, right? Hank's concerned about this channel. Or was it one time? Maybe not anymore. But this right here. I think you were doing something like this, right? Let me see. I guess it was a little bit less. It was a little bit more than that. There we go. Because it had dropped through here, I think is what you were looking at, right? There we go. Yeah, because it dropped through right over here. So if you come off this bottom here and it drops through and it's just kind of getting rejected right there now. Now, my problem with this as a channel is that you're bounce, bounce, and then up. If you're going to get the top here, you can pull that right there. So you're basically touching multiple times here and then touching up instead of moving back and forth between it. So that always makes me exceptionally cautious about it. I think the better, if you have to draw a channel there, I think the better channel is thrown from here. I think it is off that. Because now you have a touch at the bottom, touch at the top, touch at the bottom, and that EQ runs really swell right there. Really nice. As far as where you would normally expect the equilibrium of a channel to kind of move through. Kind of push this up here the rest of the way. There we go. And if you even want to look at this, you can even look at this. Basically a touch at the top, touch at the bottom, touch at the top, touch at the bottom. So to me, this is a cleaner channel. Again, especially where that EQ runs off on there as support and resistance. And it gives you what you look for in each channel. You look for a move from support to resistance back and forth rather than bounces on the same one. Anytime you're getting those multiple bounces the same one, the way I look at this is if you have what you think's a channel and you're not moving, alternating back and forth, you're just getting a couple of jumps on the same line there, whether it's at resistance or at support. The way I look at that is it's channel-ish. And in other words, I think what it does basically is it gives us directional look. So price is moving in that direction, generally along those kind of lines. But it's not the channel that you would kind of watch and expect a breakdown to be heading down. But, again, that's just me and my, what a stickler I am for, patterns. If a pattern doesn't have a clear movement from, resistance to support back and forth or the other way around, it really makes me question it as far as a pattern goes. And channels are patterns. So I kind of look at that. And so that then makes this here, this ascending wedge here now. And so if we look at this ascending wedge, let me go ahead and change these lines here to something a bit solid. I'll put it up here like this. All right. So now if we look at this as a wedge, then we have a 1, 2, 3, 4, 5 falls out of the wedge right to this previous congestion area and then a move up. And so this is what usually happens with wedges. If they're leading diagonal, which this would, be in this case, is you'll have the fallout and you'll get a short 2. That wave 2, instead of going where you normally expect it to, it kind of hits around that 38.2 kind of area, which is usually where that latest cluster of activity is. So you get that 2 there, and then you pop on up. And something most of y'all probably don't want to see is way up here. If you extend as we normally do, you end up here at about 156. There is on the monthly here, there is slight hidden bullish divergence here. You've got a lower low. And of course, you've got higher lows here. The other things you're going to look at here, you've got a bullish engulfing candle at the end of a downtrend, and it's happening on support. Now, the bullish engulfing itself doesn't necessarily mean it's definitely going to reverse. It's a potential reversal. We need to see confirmation with this month's candle. But the fact that you're getting that on support, kind of puts the odds in your favor that that's going to be a reversal off that. Again, you've got a bullish crossover here and oversold with Stochh RSI. Yeah, so I mean that's kind of where I'm looking at with that at the moment. Just looking at these larger time frames, contrasting to what people are generally looking at. I tend to be a bit more of a stickler in the things that I look for and the way I look for them to play out, as far as patterns and stuff like that go, channels. Let me see here. Amber Lee, what's going on? I'm saying two things. Number one is you don't charge enough. I appreciate that. And two, could you do more charts on BSV on a regular basis? I love that coin. It's easy to trade. Yeah, I can see what I can do about that. Sure. I can see what I can do about that. Yeah, I mean, we already do BCH on our daily updates. So, yeah, let me see what I can do about that. We'll see if I can get in there maybe a more regular one. Sure. Why can't you wrap your head around the deflation scenario, Hank? I mean, I know that's what it is. I've known that's what the issue is when you're trying to look at it. I'm curious of why you can't wrap your head around that deflationary scenario. Just out of curiosity, obviously. Let me see here. What other charts we got here, guys? Let's jump on it. Let's see what else we've got. Let's go ahead and do precious metals right off here. We'll start with silver. Let's see here. Excuse me. No clue. It just doesn't make sense to you, Hank? Yeah. Well, if there's global... don't even worry about deflation or whatever, all these other things. Just understand if there's global insecurity, if people around the world aren't feeling too positive about things, especially in relation to what's going on in the U.S., they're going to go to the dollar. Because, again, the dollar, with its status of what it is, your reserve currency, petrodollar, over 50% of the world's debt is denominated in dollars, all these things. And so because of all that, if you're first to the party, you get your dollars cheap. If you're late to the party, you may not get them at all. And of course, for emerging economies, that's a huge, huge, huge thing. And, if they go, if they can't pay their debts, that affects everything. The value of everything. So, silver, I've got this right here with silver. Right now, I've got this as a 1, 2, 3, 4 here. Well, I've got it as a 1, 2, and then within that, I've got it as a 1, 2, 3, 4 right now, with this 5 target down here. At this green box at $20.37 to $20.72.5 right there. Now, what we need to see here is we need to see a turn down below, before this swing high here. I can look at this and I can maybe get 5 here and get an A, B, C, and then 1, 2, 3, 4, 5. But it's also possible you can get a 1, 2, 3, 4, 5 here. So that would give you an A, and then you have your B, and then you have 1, 2, you get 3, 4, and you get a slightly higher high here for 5 for C. So I'm looking for either a reversal from here and to head down below this swing low, around this $23.29 area, $23.29 area, and then especially below this dashed line here to really kind of signal, okay, top is in, we're coming to 5. If we move up above this, I'm looking right here at the 50%. Maybe just dip, maybe just a tad above it where we've got this wick here. So maybe $24.88 up to $25.04.5 maybe, that range right there, just to finish this out. And if that's the case, again, my idea is then that this is a 1, 2, 3, 4, 5. So that gives you your A, B, C gives you your B. And then you have this ending diagonal here for a 1, 2, 3, 4, 5 with your C. again, price coming down here toward this target box down here. Is it possible? I'm sure you could probably do like a complex correction in here, something like a WXY or something, and maybe get it where this is the low of the corrective move and we're heading up. But you've got a lot of work to do to kind of. I think the default is this here with all the price action rather than that other one, because you've got to get through some levels first to get to that. So, still keeping an eye open that we might be, that this could just be like the last correction before the final wave up. As I've talked about for months now, and that would get us up here. But my primary has it like you see it here, where we do have more downside coming. Again, looking toward, sub 8 for it. And so, again, on the 4-hour here, we're almost topped out at overbought. RSI is nearing overbought here. So I could definitely see it getting some more upside there. Daily bounce just above our oversold on the RSI, so it definitely has more room to go down. And so this coming on down here would make sense to pull the daily RSI down into oversold. Stoke RSI back on down there as well. You notice this box is right here around the S1 pivot on the daily. Now there is a gap there that gets you down to around $20.18.5. So if this turns down and comes down, we're going to keep an eye on, this is one of those ones we update a couple of times a day in Discord. And so, I'll update my count if it needs to be, depending on how we can get that. We see how it counts out as a 1, 2, 3, 4, 5 as it's working through all that. So, I'm expecting a reversal. Again, that 50% level is right here around the pivot of the daily. So I'm really kind of thinking we might have that one more move up toward that, and then the move down toward the S1 on the daily. So that's what I'm kind of looking about with that there. Hey there, LG. Good to see you. Good to see you. Oh, look. People are going to come in and act stupid. Bye-bye. Don't think you guys are going to come in here and say stupid stuff. Just talking out of your rear end, and I'm going to let you stay. I don't have to. That's great stuff. Let me see here. Let me catch up here. Where are we? Gold. Gold. Let's look at gold here real quick since we just looked at silver. Let's see here. Yeah, Hank, I guess you missed it, man. Somebody showing up there in the chat. Just talking out of their rear end. Send them off quick and easy. Now, gold to me has a little bit more possibility. I mean, structurally, it gives me a little bit more thought that it could go up. I'm still, my primary is still further down, in line with what I've been talking about. But, so my primary right here has, let me see here. So I've got this, same thing as silver. I've got a 1 and a 2. Now, right now, I've got this as a 1, 2, and then this 1, 2. And I don't like doing that, where you've got a 1, 2, 1, 2, 1, 2. Usually 2 out, a 1, 2, 1, 2, okay. But when you start getting 3 or more nested, I really start having issue with it. So it is, I think maybe it's possible here that this sub 1 of wave 3 here could maybe be like an ABC for a 1 and then a 2 and then an ABC for a 3 and then a 4 and then an ABC for a 5, which would then give us, let me see here. Yeah, so I might be changing this live here with you guys right now. That's 1. That's 2. I've got issue with this potentially being 3 because it's so far off of that 1618. So I would tend to look at this as maybe, I don't know. I have a lot of issue with the 1 2 1 2 1 2 here, or a 1 2 1 2, and then this would end up being a 1 2 here. But that wouldn't be a 1 2 anymore. It'd be a 1 2 1 2. Okay, that would work. I could do that. So here's what I'm looking at. I think I'm doing this. I'm going to go this way, guys. I'm going to give this a 3 here. I'm going to give this a 4 up here at the triangle. I'm going to give this the 5 here. And that's not going to be 3. So 1, 2, 3, 4, 5. Man, my things are so off here. I can't put anything else in there. So let's do this. Now that y'all have seen how that goes there. I don't have another another degree between this one and the other one that I can use. So I've got to pull it off here. So I think this actually may be, if we do this here, now a 1 2. And then I still get that 1 2 1 2, and I'll get a 1 2 here. But anyway, let me see here. If I do this and I pull this up here, that gives us a pullback then of what? Gives us almost a 50% there. Then it gives us an A and a B, and then a 1 2 3 4. Might get a 5 further up here toward this area. I think that's what we might be doing. But I'll talk about my alternate here in a minute real quick here. If we do something like this, gets us up there, that would then have a 3 way down here. 1698. Excuse me. Jeez. Let me see here. If we do that, give us a 4 at 1790. Give us a 5 down here at 1641, which becomes 3. And so, no, that actually becomes this 3. Let me see here. So still not even off the big 3 yet there. But, let me see. If we do this, let's see here, that's off this one right here. So how far does this actually go? I mean, I'm expecting accelerated sell-offs against the dollar across Forex. So if we're seeing that, we're probably, we could see it in precious metals here as well. That would give us a 3.0 extension down here, about that. I could see that happening. Yeah, because basically, I'm looking for us to get down here. Oh my gosh, some of these things didn't change colors with me. You guys know I'm looking at about, $900 around that area for the target. And so if we think about that, let me just get this all set up here so we can see everything's going on here. Let's see. And then, of course, we've got this one up here. We got this one right here, too. Man, I left a lot off there, didn't I? All right, I think I'm good to go here now. So if we're looking to get down there, down toward this area here, and we look at this as a has 3, so 5's likely here, which makes that the large 3 here. Then 5. So this would give us this down here. See, we might be looking down here around 2618 here to finish that off. And if that is, then what we may actually see, again, my idea being this is wave C here. If it's wave C, we're going to have 5 down. So we can maybe get a bit of an overlap there coming on down there to that area. I mean, it would work. It would work. If we can get a strong sell-off here, that would work. So right now, we're going to kind of keep it there. Looking for further downside. The alternate count I was talking about is, let me get rid of all these other things here. The alternate count suggests what I've talked about, which is possibly, you know, again, like on silver here, you get this pullback here, and then you have one more higher high. Remember, I've talked about that up to maybe 2,300. In that case, you would have what amounts to an A here. This would be a B triangle. A, B, C, D, E. So you have an A, triangle is a B. And then you potentially have this here as a 1, 2, 3, 4, 5 as a C. And so this would then be the bottom heading up. But that does not become primary until we're getting above this swing high up here. Because until this point up here, we're still valid 1, 2, potentially 3 working here. So that's kind of, you know, what I'm looking at with that. Again, a little bit clearer potentially here on gold than it is on silver. You know, silver doesn't have quite that triangle there that could be a B. So silver, I think you'd be looking at a W and then an X and then a Y, but just no triangle there for that X area. So you know, again, still keep an eye on it, still watching it. If we're dropping below this swing low right here, this triangle termination point, wave E. So 17.28 and 30 cents. That should kind of confirm that this top is in, that it's in, and we're heading lower. But until that point, still the possibility that we could head up. So that's what we're going to continue to watch there. At this time anyway. Let's see here. Let me kind of catch up with what you guys are saying here real quick. Let me see here. Chemos believes that gold is an ABC with that triangle as a B wave as part of a larger A wave. So another little, let me see here. So another little leg up and then 5-wave impulse down for the C wave to 1750. I'm not sure where you're talking about. You're talking about A here, triangle B there, and then that down? Maybe. That's why I said maybe. Or, you know, again, could be finished right here. But there's no guarantee that it is. Not at all. Not at all. And I'll tell you what, right now, if my broader macroeconomic ideas are correct, which so far things have been following through as expected, then you're not going to have gold going up. You can't. You're not going to. Because everybody's going to go to the dollar. And if you're going to the dollar, you're not going to buy gold with more expensive dollars. You know, people don't do that. People people that have a lot of money and a lot of thought, they don't spend an appreciating asset for a depreciating asset. So, again, if the dollar is rising in value, it's appreciating, as an asset. Gold would necessarily be depreciating, can't even say it. Because, again, it takes less dollars to buy gold. Price of gold's got to go down, right? So I think we got to be careful if we say something's definitely going to happen. Again, guys, I have my opinions because of everything that I've discussed so many times before, from grand super cycles, to the economic condition, to the social mood, all this stuff that's going on. And then the charts on top of that, which would seem to align with it. But until we get those areas, until we get through those areas, there's still possible other upside. So yeah. Hey there, Crypto Girl. Good to see you. Let me see here. Catch up to you guys real quick here. So, okay, yeah. So anyway, yeah. So, I mean, that's kind of what I'm thinking there overall. So we'll see what happens. I don't believe that we're heading up at the moment. I think we're just finishing a bit of a pullback here, and then we'll have downside. But, again, if we continue up, in this case, with this current count here, if we continue up through this swing high right here, at basically $2,001, that would invalidate this, what I have listed here. It doesn't invalidate this, but it does invalidate this right here. You get above that swing high, now you're starting to look like, well, I don't know. Maybe it's possibly going up there. And, again, you're looking at this being an A, again, a B, a triangle here, and then potentially a C here, or a C a little bit further down as it plays out more. If this is before it heads up, you want to keep it. It's got to stay above this swing low here. That's not a lot of room. I mean, I guess you could get a 1, 2, 3, 4, 5. But you might have to... No, this is 5 down, though. Seems like a pretty clear 5 down. I don't know. I guess maybe you can get an ABC out of this. Maybe, generically. And if you do that, this could be a W and then a triangle for an X here. And then you have an A and a B here, and then you'll have a C down. But again, if price is dropping below this swing low here, this triangle, termination point, that should be it for the top there. Because this wave up is now completed. You can't expand on it anymore, because you would have it dropping back below where it started. So that's why we watch that area right there. Let's see here. But anyway, that's what I'm kind of looking at. So we've got that. What else we got here? We've got oil. Let's take a look at oil, man. Oil making some of our members some money. Let's take a look here. What do we got? There's oil. Oil is a lot of fun, right? It was a pain in the rear end up here. It was a pain in the rear end right in here. But, again, it's corrective. Usually is. Right now, I've got us as an A and a B. And then of that, I've got us as a 1 completed here. And you'll notice, subwave 1 of C terminating near the previous wave of the larger degree, wave A. So wave A terminated here. I believe we've got termination right here. So if I'm correct, then we should be looking for price to make its way up here toward the 70.5, up here around $40.20 or so. That's my target right now, where I'm kind of looking forward to get to. If it does that, you have a wave 3 minimum target of $32. Wave 4 actually hits perfectly at the EQ, 35.20 here, of this supply structure here. And then 5 gets you down here just below $30, around $30. Now, there's nothing saying here that wave 3 or wave 5 cannot overextend, or wave 4 cannot just pull back shorter or even deeper. But this is generally, from this point, our usual extensions that we look for in retracements. That's where I'd have it. So yeah, that's kind of what I'm seeing now. Now, the other thing is, again, prior to this move up, I was still looking at this move up to be a wave 4 and then a wave 5. Something, ugly like May happening once more. What happened in May? But again, it's got work to do to get down there. So for right now, this count as a 1 up and working on a 2 on a pullback here makes a bit more sense at the moment. But depending on how this wave 2 continues to play out, if it starts looking like 5 waves rather than 3, well, that opens up the possibility that this swing high up here is only wave 4, and we've got all this wave 5 still to go down negative again. Do I see that happening? You know what? Here's the deal, guys. We've still got a supply glut across the world. We've still got countries pumping out more than they need to. If the governments, continue to respond to COVID in ways that make it difficult for businesses to operate, I could see another possible issue coming up. Sure. Again, the fact that it's the first time in history that we've actually had that negative, price. It would be kind of weird to see it happening again, but, it's a weird time right now, right? been a weird year. Not that I think we'd get down there, before the end of the year or anything, but just that right now I'm looking at this as a 1 up and a 2 on a pullback. But again, depending on how this continues to develop here, I am open to the possibility of my previous thought, which was this is 4, and we've got 5 still to go down. So, let me see here. Oh, let me see here. There's Silvio. Good to see you. Pedro, what's going on? He says, here's a question today. How do I start setting up Elliott Wave on a given asset? Should I work setting the macro waves, meaning since there's a chart for an asset and then micro? Or what? Basically, for Elliott Wave, it depends on what time frame you're trying to trade it. If you're just trying to trade a smaller time frame, start from the smaller time frame. You're just going from swing high to swing low. So, if you're in here on the 1 hour, on here, you should be looking swing high, swing low. Get your count off that. And if you've got 5, then you've got 3 the other way. And if you've got 3 the other way, then you may have 3 or 5 the other way. And so you just start like that. But you always go from the swing high to the swing low. So again, for me, if you were just jumping in here, for instance, on oil here, there's no reason not to start here to here. There's your first, figure that Elliott Wave sequence out. I've got, 5 down for it. So this could be an A or a 1. But because I'm thinking this is a 1 with a 2, it's an A. But again, that's why I said, if we get this where it develops into 5 waves down instead of 3, so if we do 1, 2, 3, 4, 5, well, now that wasn't an A. That was a 1. But at least until it gets to that 3, it could at least be an ABC or a 1, 2, 3. So you've got opportunity there to still trade it while it's developing and you're figuring out your count. But always go from swing high to swing low. Backing out to the larger time frames definitely helps. Or even starting there and kind of coming in. But you always, no matter where you start with Elliott Wave, you're always going to start with your swing high and your swing low. And go from there. You either have 3 or you have 5. If you've got 3, you could have 5 come up, or again, you could have a successive number of 3s. A triangle or a flat or something like that. But if you guys are doing Elliott Wave, it's really important that you understand what your corrective structures look like and what they could possibly be. Get to know your retracement levels, your expected retracement levels as well. Because that'll keep, the first rule there when you're doing Elliott Wave is, one of the first rules is, does it follow the rules? Elliott Wave has rules and it has really, really strong suggestions, guidelines, we'll call them, okay? And so the first thing is, if you look at something, you have to make sure it abides by the rules. Does wave 2 retrace below wave 1? If it does, it's not a 1, 2. Is wave 3 the shortest of 1, 3, and 5? If it is, it's not a wave 3. Did wave 4 pull back into wave 1? If it did, it's most likely not correct, but that's not a rule. Wave 1 pulling in wave 4 is a guideline, because you can have wave 4 pull back into wave 1 if you've got an ending or a leading diagonal. So you have to understand what are rules and what are guidelines. And then you have to make sure, first thing on a chart, does it fit the rules? If it doesn't fit the rules, then stop looking at everything else and redo it. Once it does, once you're sure that it fits the rules, then look at the guidelines. Does it follow the guidelines? If you have a choice between 2 or 3 different counts, use the one. If they all fit the rules, but they all look kind of different, grab the one that most closely resembles the guidelines. So yeah, what you do there. Let me see here. Let me see, where are we at? So this is oil. We've got natural gas here real quick. Take a look at. Yeah, natural gas looking like we've got 4 completed here. This is the product of the rollover from the October to November contracts. So that's why you got this large move up here. But as you can see, we've got potentially a 1, 2, 3 up here and a 4. That pullback is the 50% right there around the R1 pivot. Works good. And so I'll be looking for a price to target up here about $2.90 to about $3. That little range. But if it continues down below this R1 swing low, my first thought is the 70.5 right here at $2.25 basically, followed by this 90% area here at about $2.10. But that really then starts calling into question the count at that point. As long as we're reversing off here, we're doing good. So you want to see this move above this swing high right here. What is that, $2.59? If we can get above that, that's the first clue that the bottom's probably in for 4 here, and we're heading up for 5. We need to move above this wave 3 here to all but guarantee it, to confirm that. So again, nat gas doing nat gas, man, doing its thing there. Yeah, Pedro, definitely watch those educational videos, man, for sure, for sure. You know, the most difficult thing about Elliott Wave, guys, is it takes time to remember. It takes time to learn it and to apply it properly, and then to remember what are the rules and what are just the guidelines, and then to remember those, those fib retraces that we look for. You know, again, wave 2, we generally look for a 61.8, right? But as I've said, 70.5 is really active these days. So I'd add 70.5 on there, more than 61.8. Wave 3, you look to extend 1.618 of wave 1. Wave 4, you look to pull back 38.2 of wave 3. And wave 5, you look to extend 61.8 of wave 3. These are all minimums, but minimums and usual expected general areas. So if you're going to do Elliott Wave, you got to put the time in to learn it all, guys. It's going to take a little bit. But once you do, even if you don't want to do Elliott Wave all the time, it can at least help you not freak out when things start happening that you're not expecting. Corrections work in a certain way. Advances work generally in a certain way. So that having a bit of understanding keeps you from being overly scared and doing something emotional most of the time. Let's see here. Let me see. So I did all that. So again, I'll just go ahead and pull up the Euro USD here, which is basically the opposite of the Dixie, the DXY. Again, because the euro makes up about 58.2, 58.4% of the weighted basket that the dollar is compared to, that gets you the DXY value. So I'm still kind of looking at euro the same way right now. I'm looking for a breakdown below the swing low there to send it down. What do we get here? I've got us basically as a 1-2-1-2. Tag the 61.8 extension there. Dropped off out of that ascending channel. Pushed up against it, rejected a few times. Kind of sitting on the pivot. Looking for it to kind of come on down out of there. We've got a bit of a bullish or hidden bullish divergence here on the 4-hour on this. But I'm thinking that's probably just going to be a limited pullback there on that. And that's what we're kind of getting there. We're getting all these right here. If I zoom in a bit, you can see them a little bit better maybe. It's this right here. Rejected, rejected, rejected here. So looking for it to kind of fall its way on down through that. My wave 3 target, the 1618 extension off of wave 1 here, is down here at about 1.35. So that kind of, and you'll see that kind of gets you right here at this support resistance level right here. See this resistance level? It takes you just right there. 4 pops back up here. And then 5, of course, hits you right here at this high volume node area. Right in there. So looks pretty good at the moment. Again, I would expect a stronger sell-off once it's getting down to this area here. And that would align with what I was saying with the DXY, where I'm kind of expecting it to pop on up. And of course, with what I said with the gold and everything else, potentially get a a ratchet on down kind of thing going on, as a result with all that. So, I mean that's kind of where I'm at with that at the moment. The daily, we're bullish on Stoke RSI here. RSI is kind of following this trend line down, basically. Hasn't dipped into oversold yet. So, continue to watch that, of course. Let's see here. NASDAQ. What's going on with the NASDAQ? NASDAQ, here we go. So I've got us as an ABC as a 1 here. ABC up here is a 2. I was looking at the possibility of this maybe being a double bottom here. So the pattern target is up here around that 11,739 area. And it could still potentially get there. Right now I'm looking at this as a 1, 2. And then a 1, 2, 3, 4, 5 gives you a 3 and a 4. And then 1, 2, 3, 4, 5 is then any diagonal there for 5. I think maybe I don't think it's going to happen, but maybe it's possible that this could be 3 up here. We're tapping the 50% retracement, so this could be a 4. So again, this would be a 1, 2, 3, 4. And you have 5, and your 5 would fill in that right there. That 5 would get you, let's see here. Measure wave 3. What would be wave 3? And that gives you, well, where's your 618 on that? 618's just below that target there. So I could see that. I could see either this is a 1, 2, 3, 4, 5. In which case, we need to see it continuing on down into the where this 1 is. It had a high of $11,026.43. If we dip into that, that should say that this is done as it is labeled here. If we reverse anywhere prior to that, this could potentially a 1, 2, 3, 4, with your 5 being right near this 11,730, 11,740 kind of area. But I don't see any reason to be any more bullish than that at this time. So we kind of sit with that. This is the 1 hour. If we're looking at the daily is well overbought here. Stoke RSI has not hit oversold. There's little to be bullish about when you're looking at this. You moved here, getting rejected at the pivot, gapping down. Again, setting that up. And so if you get a drop here below this 10,677 and 85, that should let you know that you're definitely headed lower off that. Let's see here. Let me see here. Oh, where else am I looking here? We've got the, let's look at the S&P E-minis here. Look at these as well. Same idea, basically. Except I've got a 1, 2, 1, 2 on the S&P E-minis. And so we're getting this bounce locally here. Again, if heading down here, what we're looking for is a decline below this wave 4 swing low here. So that's 32.91.25. If we can get below that, that should be the first clue that we're probably topped out here and we're heading down in the next wave. Whoops. I guess if, God, I hate head and shoulders patterns, but I guess if you wanted to look at it as one, you could maybe look at it like this. Potentially, from about where it's at. And that'll give you then a target, of course, pretty close to getting down there toward all the activity near the swing low. See? Right there. And so, again, this would be the first subwave of the that ends up terminating near the wave of the previous wave of the larger degree here, as we continue to talk about. So that's possibly something that could be building there if you're into patterns. If you absolutely have to have a head and shoulders pattern, maybe showing up there. But again, right now I don't see any reason to be any more bullish than that at the moment. Now, if price advances, above this wave 2 here at 34.19 and 50 cents, well, at that point, then we start looking, okay, maybe there's something else going on. Till that happens, though, right now we're at a 1-2, working on more down there with it. Let me see here. Let me see. Can you put the previous February high there also for the NASDAQ? Previous February high. Let me see. I guess you're talking about this here. Let me see. Yeah, I could put that there, but I'm not sure what you want it for. If you decline below that, that's probably a pretty good indication on bigger scale that you're headed down more. I know everybody wants to be bullish and they think it can't possibly go down, but that's usually what happens at the market tops, guys. As I've been showing you guys for the last 2 years, everything that's been building up to this point where we're coming down now is everything that's happened in 1987, leading up to the that October, where you had that huge drop. The same things that happened leading up to and then into the drop there for the dot-com bubble bust. Everything leading up to and then into the great financial crisis, decline off that. So all these different things, all these more fundamental things that we've looked at, and even technical things that we looked at on the charts, are all the same thing that's happened in all those cases. In some of those, you had some things that happened in the dot-com bust that didn't happen in the GFC, and some things that happened in one or both of those but didn't happen in 1987. And then you look, and a lot of what's going on here looks and deals a lot like what happened in the Great Depression back in 1929 coming into 30 and whatnot. So when you look at that, I don't know, everybody wants to think the markets are always going to continue to go up, and they'll be adamant about it. They'll be disrespectful and rude because how dare somebody say that they can't that it's not going to go up. And I'm not saying it's not going to. I'm just saying I think this is it, guys. If we look at, again, Grand Super Cycle, this is wave 3 top. Should be. We've had major tops coming out of the Great Depression. It was every 17 years on average. The only time that's different is this current one, which is about 20 years. There's a whole lot going into that, guys. That really kind of should make you question it. But, again, most retail traders don't. They just get very emotional and very hurt. It's like I'm seething into their soul or something, searing into their soul. When I say something like that. And I'm not here trying to be bullish or bearish or anything. I'm just here telling you what things look like. I'll trade it either way and make money. You should learn to do the same. If you do that, you're going to make a lot more money over time than if you're just emotionally bullish all the time on everything. There's got to come points where you go there and you go, well, listen, things aren't looking like they need to look for me to continue to hold that opinion. And that's why I always tell you guys, I show you guys, I've got other ideas, that I'm looking at. If price invalidates a level, well, okay, now we need to pay more attention because, alternative count is potentially kicking in. But there isn't whole lot going on that makes a lot of bullish sense right now, guys. That's the reality of it. And sadly, I try and bring up the information, but most of y'all don't understand the information. So it's hard for you to get on board. It's hard for you to understand what I'm trying to say with that, or why it makes a difference, or why it's significant like it is. That's why I spend so much time on these streams, and I try to explain things a lot more to try and help you get a grip on, on what I'm saying and why. But you know what? At the end of the day, I could be wrong. But that's all right. I know where I'm sitting. I know where I'm looking. If I'm wrong, I'm wrong. It's all right. It's not like, oh my God, all of a sudden I'm going to be poor. If that's the case, that isn't how you trade, guys. For sure on that. Let me see here. Let's see here. Let me see here. Oh, okay. Mr. Who's the Gamer? You were wanting me to put the February on there, but then you said it was already deleted comment because of it. Oh, okay. I see what you're saying. All right. But yeah, so, again, always something to look at. There's always ideas of what's going on, guys. You should always pay attention, to more than just what you want to happen. We can look at, when I was talking about the S&P, let's do this real quick here while we've got a few minutes. Here's a good example. Pull this back up here. So, we look at the stock market here. It's actually clearer to see on the Dow. But right here is where this distributive events kind of starts, okay? At least on the Dow chart is where I had it starting. And so, looking for a higher high. Now, this is the S&P, so it's a little bit different. It's not the Dow. Let me see if I can get the Dow here real quick. Might be a little bit easier to work with at the moment. I can show you what I was talking about and what I was thinking. All right. So with the Dow, I was looking at this range right here. And the odds, as this played out, because remember, back here in May of 2019, I said we were going to have this, followed by this, followed by a move up here. And I said we were either going to get... have it, end prior to this, or we were going to get another higher high out of it. And we got that higher high out of it. Now, I had a $30,000 target right around there because it's a round number. We hit 29.5. So I did pretty good, right? Now, at this right here, big drop, was looking at it definitely being further down. Now, as far as this being the top here, and this being the first move down, okay? Now, as you can see, I'm correct on the Dow Jones. The Dow Jones index here did not actually make a higher high like the other ones. And that's important to recognize because the Dow Jones is a more diverse set of stocks. NASDAQ is basically all technology, right? And that was the one thing that's been pulling up the markets for the last couple of years. So yeah, the Nasdaq's gonna make higher highs. The S&P, it's got some tech in it and whatnot as well. Not as diverse as the Dow Jones, as far as the types of companies that are in it. So the S&P took a while longer and finally made a bit higher high. Dow Jones didn't though, so that's important. Now what I said was, when we get down here, I was looking at that 18,000 area, and that's about where we got. We got down 18.2. And I said, okay, we're looking for this move up. And I was looking at, just a general 70 or so % pullback. But I said, down here, I would not be surprised if we went almost all the way up there and filled in the gap. Because that way, when it turns down, there's no gaps left. So that's what happened here. Now, again, on the S&P, if we look here, The S&P looks a little bit different. Right here. There we go. And so, it made that bit of, slightly higher high coming off here. But, the thing I think you need to get from this is, even though I didn't expect the S&P to actually go above to print a new high, it was always a possibility. As a matter of fact, I believe we were talking in here about this potentially being an A, B, C flat here, followed by a wave 5 up if it got above here. So, it's always one of those possibilities. No, I wasn't leaning into it as something that was likely to happen. But the closer we got to it, the more we kind of leaned toward it potentially happening. But what I want you guys to understand, though, is I didn't ever say right here, this was it and that's all. It was always about, well, this is what I think is going to happen and head down here. But there's always the possibility it could continue up. It's understanding where are your invalidation levels. And understanding that you shouldn't be so stuck on a position that you believe that it can't possibly go the other way. I think this is probably one of the most important things that retail traders really need to understand. Because as retail, you tend to get in there with the absolutes. Oh, it's definitely doing this. Oh, it's definitely going to do that. Oh, it can't do that. What are you, an idiot? And if that's your thought process, you're going to end up losing a lot of money as a trader. Like a lot of money. Because especially if you're new, price rarely is going to do what you think it's going to do. So even if you have a strong held conviction like I did about this going down and then coming up and then pulling down further here, it wasn't completely, it can't possibly go up. And as a matter of fact, we had other scenarios where we were looking at it going, much higher up potentially. As far as this maybe being, completing that 4. And then a move up here with the Dow, I was looking at potentially, if it was to pull up on a 5 like that, a large 5 going off, potentially 45, 50,000. And I know I said many times during the last couple of years, I said, if it does that, I said that gives you, a year or two to kind of get your act together and get your affairs settled, because what would happen at that point would be so much worse than anything that happened right here. And so, of course, I said all on live stream. So, those of you that were with me before, you can vouch for me there. But the important thing is, again, not to believe that whatever view you have the market can't possibly be wrong. And I hope I make that clear enough with you guys by always giving you these other options, by always letting you see these other things that may be happening. Always know where your validation levels are and where your invalidation levels are. Let me see here. Let's see here. But, so that's what we're looking at here, guys. At the end of the day, listen, guys, the reality of it is, it doesn't matter how long you've been doing this. At the end of the day, nobody has a crystal ball, okay? Nobody, and if you're looking for somebody to guarantee price action to you, and somebody actually does it, don't listen to them. Your only hope is that they get lucky and they're correct, because it'll be lucky. When you guarantee something, there are no guarantees. Trading is speculation. You are a speculator if you're trading. And if you look up the definition of speculation, it says there are no guarantees, which means you absolutely have to manage your risk properly. I don't care if somebody says they've been doing it for 50 years and they're guaranteeing you this is going to happen. You can listen to them. They've been doing it 50 years. Listen to them. But don't you dare buy into the guarantee nonsense. Anybody that's been doing this for, 10, 20, 30, 50 or whatever, they're not going to guarantee you. And if they do, what the heck do they think? I don't know. I can't understand that. I know a lot of really good traders have been doing it a very long time. Some of them longer than I have. None of them guarantee, because they all understand what I just said, which is that there are no guarantees in the market. No matter how good something does or doesn't look, there's never a guarantee, Could be wrong. That's why risk management is so important. Any megaphone patterns visible? Possibly. But then your count is really jacked trying to come into this. I tried to look at that as a possibility back in December of 2019. I updated my chart that called for all this move here. And I posted that chart was again from I guess around April or May of 2019. That chart I actually posted, and then May of 2019, I gave an update that said, well, maybe we could see something like this as a what do you call it here, megaphone type pattern. It's just an inverted symmetrical triangle, but again, to do that, you have to go back here, and I've gone back through the count here a few times, and I don't find a count that looks reasonably likely that ends with that as a large wave 4 here. Because that's what this would be then. This would be a wave 4. So, even though I posted it there in December as a possibility, I hadn't actually gone back all the way through all the counts and looked at it. And now that I have, I don't see that that's really a viable, because everything gets me, up here around 3 here. And so you'd be looking at it here. You go A, B, C, D, E, and then head up. But, again, I could still be wrong on that. If you're looking back 100 years on a chart, there's a lot of information on there. So a lot of ways that you could be, incorrect on there. So, yeah. Let me see here. Alex D says, why doesn't the Great British Pound finally drop? The Great British Pound against the dollar is a pain for hours. Well, what? You're not happy with it as easy as you dropped already, leading into it? Do a monthly inverse on the SPX and tell me that is bearish. I've fallen for that a few times and got out there and actually done it for the inverse idea on charts is just silliness, I think, honestly. This isn't the SPX, this is just the E-minis, but we can do it here. Get you there. And you're saying tell you that isn't bullish? Or tell you that this is bearish? Okay, I'll tell you that's bearish. I don't see why you would think it's not. I'm not seeing what you're looking at there. On there, you zoom out here. Yeah, I mean, I'm seeing cluster here. Looking for cluster here, or not quite as cluster there. We got that here. Come on down further. I mean, that's what I'm looking if I'm looking at it. Again, this is only the E-minis, though. They only go back here to, 97 or so. But yeah. So, I don't know. If I'm looking at that. Yeah, so if I'm looking at this, I'm looking for this to pull down. So I guess, okay, so you're saying, oh, guys, let me catch up with what you're saying here. Maybe I read you wrong there. Or maybe I read you right and didn't think right when I said it. Oh, I can't find it there. Anyway. Yeah, I mean, if you're going to look at this, and you have to be bullish on this, if you want to flip it and you have to be bullish, again, you're bouncing off the R1 pivot here. But, I mean, it's the same idea that we look at the other way. I mean, and even here, you've got, God, let me get off this. I hate the inverse charts, man. Just look right here. Look. Even on the monthly here. You got this large bit of still bearish divergence here from the start of this whole thing here. Let me get rid of this. Oh, there we go. And so you've got these higher highs coming off for the last 2 years. Lower highs off here. And so it's happened most recently right here. So you should be expecting a decent bit of a pullback on that. If I want to be bullish here, the same thing I said before. You drop through the pivot, bounced off the S2, nice large wick, and then you pushed up through the pivot and you hit the R1. So if I was to be bullish on this, take everything else out of the way. If I was to be bullish on this, this is the way I would look at it. I'd say, okay, drop through, pushed up on through, reject the R1, looking for a pullback and then a push higher. But that's just looking at that by itself. So, you kind of leave out a lot of what you're looking at when you do that. Again, even on the weekly here, you have this large bit of bearish divergence for the year here just about. So, yeah. So, just some things to look at there. But anyway, if it goes up, it goes up, guys. Here's the thing. I will tell you this. If it does go up here and continue up, then, this is the most likely thing we can get through is that this would be a 4 in this area here. So you've got this 4 going on. And this is, and as I said, this is 5. But this is just like a sub 1 of 5, basically. So you've got your 5 up. You get your pullback for your 2, 3, 4, 5 going up there. And so, but I mean, that's it though. So this is what I can say to you guys. If we go up and we get back above this swing high here, and it continues up there, suggesting that this is a 1 and we got to pull back on a 2 and we're going 3, 4, 5. Understand that is most likely your last chance there. So you've probably got, a couple of years maybe to get your everything figured out, because what would happen then is the amount of turmoil and economic distress that would come off this thing is going to be tons worse than what we had here. Be a lot worse. Why? Because this still hasn't corrected all this back. You say, oh, but this is so big and it's already hurt so much. Yeah, but alone you've got 10 years secular bull market here. You're not going to erase all the malinvestment and everything that's going on here in a matter of months. You're not. You can't. So what you're going to have is a partial and then a refill, which means this next one up is really going to pop hard. So you can make money in that market and make money as you're going up there, but I would be prepared, man, on that pop there to deal with what's going to result from that. So just something to think about, guys. Again, I'm not saying, I've never said it, and I won't say that it can't possibly go up. I'm human. I can be wrong. As I mentioned, 100 years, counting back 100 years on here, there's a lot of opportunity for you to be wrong, counting those waves. Especially depending on how far you're zooming in, right? So I could be wrong. But I do like the fact that, it's kind of really seeing the same thing. So, I mean, they are the de facto group out there doing what they do. So having that confluence with them, I like that. But I'll bet you if you ask them, even they wouldn't agree. They would agree that it may not, do what they're thinking it may do. There's no guarantees, is what I'm trying to say. But, the evidence kind of points to this being larger top in there. And so that's just the way it is. I mean, you don't have to agree with me. You don't have to like that I say it. But just recognize I'm not saying it just to say it. I'm not saying it just to be contrary. I'm not saying it just to be bearish. Guys, at the end of the day, I'm really not a bearish or bullish person. I just look at the markets. Kind of try and figure out what they're saying and then trade with them. That's it. So, I'm going to get out of here. LXT, have a great weekend, man. Everybody else as well. I've done my time. I hope you guys have a great weekend. I appreciate you guys, hanging out with me and listening in and chiming in and whatnot. Again, Bitcoin, just looking for it to do what we're doing here. Again, I've got my bigger ideas. Bitcoin, gold, silver, stock markets, all this stuff. But it's always until something happens that says it's not. And if you're not doing that as a trader, you're trading wrong. If there's a clear invalidation of your idea, then there's no reason for you to hold on to it. If you're holding on to it, that's why you're losing money. You have to learn to flow with the markets and what's going on. You have to learn to change when there's new information coming out there, giving you something different to think about, suggesting things may not be the way that you thought they were. All right? All right, guys. Have a great weekend. As always, remember, the only thing that you control in the markets is how much you lose. That's it, guys. That's it. Positively, absolutely nothing else. So no matter how good something looks or how bad it looks, there are no guarantees. You may be wrong. As a matter of fact, take the position you are wrong. And that way you look for your invalidation levels and you know where you can protect yourself, all right? Join us at howtotradetowin.com. We'd love to have you there. All of y'all over in Discord, I'll see you over there. Have a great weekend, everybody.